Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. I welcome all of you to today's session of Daily Stock, in which we are going to talk about the quarterly earnings for the Eli Lilly, which is a big company in the pharma sector, and it has been growing. It has grown tremendously if you compare its market valuation just a couple of years back, maybe. I think the starting point can be used as COVID, where it used to trade somewhere close to 150, 160 per share. It's now in the ballpark of 900 per share. So you see there has been a growth of around six times. Its market capitalization has shot up six times in just the span of 4 years. And this is happening in the conservative in defensive pharma sector. So there you have to pay attention because it has exceeded the expectations of the patients, of the investors, of the medical community. It has delivered breakthrough medicines which has propelled it in another sphere in comparative terms, and it has been doing phenomenally well in its earnings. Its earnings report for the first quarter was quite strong, and if we consider its forward guidance for the upcoming quarters, it is expecting to do well, and it has upwardly revised its quarterly earnings targets, and that is also fueling its appreciation in the valuation. So we will get to its first quarter statement to see how things have been in the recent past and what are the kind of investing and trading opportunities which we can expect and lay our hands on. So let us get started with its consolidated statement of operations first. The revenues are now at $8.76 billion in comparison to 6.96 billion a year back. That's the growth of more than 20 percentage point happening in the top line in the span of 1 year. This is happening because it has delivered newer products for the patient, which have helped it gain in the market share, and that has resulted in the higher revenues for the first quarter of 2024 in comparison to the first quarter of 2023. These higher revenues have translated well in the net income, because if you consider the percent of the net income which it was generating on the revenues of nearly 7 billion, then after the growth of 20 percentage point in the revenue, we have seen that its net income has gone up by around 40 percentage point. I'm taking approximate numbers here, not precise numbers, but still the point is that after the initial increase in the revenues and resultant growth in the net income, the proportion of the net income growth happening in the subsequent days is always going to be higher, because the fixed cost more or less remains on the similar size, similar footing. Of course, there is some extent of increase in the fixed income, but that is more or less compensated by the strong growth in the revenue, and resultantly the operating margin improves. And here we have this same scenario playing out for the Eli Lilly as well, and that has been good news for the investors, for the traders who have been going long, believing in its bullish momentum. I feel even on these expensive valuations in competitive terms, there is still room for it to continue to run high. Of course, we can never be too sure about the quantum jump it can take, but looking at its current price trajectory, I won't be betting against it That is one thing for sure. And even if we want to take advantage of its bullish momentum, we always have to figure out the optimum entry and exit points so as to make sure that our risk is limited while we are targeting the optimum profit level. The EPS is now at $2.49 per share in comparison to the $1.49 per share a year back. That's growth of more than 40 percentage point, more than 50 percentage point. Now we will also consider its cash flow statement to see how it is utilizing the cash it is generating from the operations. There was net cash inflow of $1.16 billion from the operational activity. Out of that, it spent, that is, there was net cash outflow of 1.17 billion a year back. So we have this higher cash outflow in comparison to the cash inflow from the operations. That is because there was a lot of spending on the purchase of property and equipment. That is the major chunk of expense, major reason behind this higher cash outflow for the investment activity. Then, if we come to the financing activity, the dividends paid amounted to $1.17 billion, which is just slightly higher in comparison to the dividend paid in the back. But one interesting thing that has taken place is company has retired the short-term debt, and instead of relying on the short-term debt, it has raised money from the proceeds of issuance of long-term debt, and that has helped it stabilize its financing because the cost of long-term debt is always lower in comparison to the cost of short-term borrowings. So that has helped it in save on the interest expenses. There was cash outflow for the other financing activities amounting to $390 million. Overall, it used $311 million for the financing activity. Resultantly, we have net decline in the cash position of the company. There has been a decline of $358 million as a result of its business decision. We have the cash and cash equivalent at $2.46 billion at the end of March quarter, that is on March 31st, 2024, in comparison to $2.818 billion at the January 1. Now we will take into account its recent price action to see if there are emerging opportunities for us to trade and invest. This is the charting for the Eli Lilly. We have this continuous formation of higher highs and higher lows. And I feel unless we have any turnaround, or you can say a breakdown of sort in its strong bullish momentum, we will have to go with the flow. And in that circumstances, if your outlook is limited to just next couple of sessions, I would say buy on dips is going to be the best strategy to employ, because if you look at these price action, you will see that whenever there has been any significant decline, if there has been any break and afterwards correction and consolidation, it has resulted in the strong rebound on the higher side, and resultantly there we have the formation of higher highs and higher lows. And I feel that is not really likely to change anytime soon unless there is any unforeseen development which results in a strong decline in the stock price of the liability. Of course, that can happen anytime, any day. but as long as its initial momentum holds and we have the formation of higher high and higher low, we can be fairly confident of our bet on the continuity of bullish momentum. So adopting a buy and dips approach is going to be the best bet in the current circumstances if your outlook is over next few days only. Now expanding the horizon to the medium term, in the last couple of months, we have seen the doubling of the stock price of the Eli Lilly. If we go back to July 2023, we had the stock sitting somewhere close to 450, 460, and now here we are seeing the Eli Lilly at 900 plus. That means in the span of 1 year, the stock price has doubled. So if you had gone for a long-term investment, you have effectively doubled your cash. And at these elevated levels, of course, we will be a bit cautious while making a new trading decision or any investment decision. And that is appropriate as well. I feel after having seen this strong rally, there might be the continuity in the rally, or there might be a case of rally going sideways. So both these possibilities are there, and then there is third possibility of rally changing course and going into a bearish decline, and that is the third possibility. So we have two possibilities in which we can profit simplified of the environment approach. So I would say if over next few weeks there is a decline and then consolidation on the lower levels while we see this prior swing high acting as a near-term support, and if there is not much of a decline below these price levels, we can be fairly confident of this opportunity and take the trading and investment decisions accordingly for next few months at the minimum. So the medium term horizon is also looking bullish. The only thing is we will have to wait for better opportunity, and as and when we have this reward ratio in a favorable manner, we can of course go for the trade. In the long term, the picture is pretty much similar. There has been this continuous rise and these higher highs and higher lows. Over the past few weeks, we have seen this strong rally after the first quarter was spent in this consolidation phase where there was strong resistance around the 800 level, which has kept the Eli Lilly contained below 800, but those days are behind us, and now there has been strong rally from 800 to 900 plus, and you might be tempted to get involved for the long term at the current valuation. But I would say that wait for next corrective and consolidation phase, and if there is no decline below the immediate swing low in course of time, we can think about initiating a new swing trade from the long-term perspective on the continuity of bullish momentum in the alignment. Things are looking fabulous, things are looking promising. The only thing which we need is the optimum entry and exit point so as to ensure that if we get it wrong, if our anticipation doesn't really turn out the way we are looking at it, we don't really want to lose too much money. So that's about it for today's session of the line. If you have any query or any idea to share, do write to me in the feedback and I will be more than happy to take the discussion forward. Thank you all for joining in. Have a fabulous time ahead. See you next time around. Till then.